Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the IWM, which is the ETF for the Russell 2000. We're going to start with our Elliott wave analysis as always and then wrap things up with some basic technical analysis at the end of the video. Now it's been several months since I've covered the IWM on the YouTube channel here. I ended up having to completely recount everything and it simply hasn't been a priority with the other major indices. I've always had a count in the background, but I haven't really taken the time to update it until now. So I did a video for Patreon exclusive last week for the Russell, and I'm now going to cycle it back into YouTube as and when I get the opportunity. So we have three counts to look at today. Two are very similar, which are both calling for a higher high and for the market to continue up. And one is bearish, which is likely to get invalidated very soon. So I figured we'd start with that one. But first, a quick rundown of where we are in time and space. And we're just going to use the chart we're on currently. So one option here is that we've completed three primary waves up. And we're now having a very drawn out sideways correction in a wave 4 before heading higher in a wave 5. We've got two ways of interpreting this corrective activity. That's the only difference between the two bullish counts, how we interpret this period of sideways chop that we've got to look at, whereas the bearish one is very close to being invalidated. I'm very happy with calling this whole extension here in the primary free, calling that our primary free. If we use a pitchfork to frame the swing high, swing low on the intermediate level to 1, 2, 3, 4 to find our fifth, we find that the entire third wave is captured beautifully inside of a standard pitchfork. So happy to call that a free. It comes to the 130.18 extension as a primary. It doesn't quite make it to the 1618, but it does subdivide nicely as an extension in the free. Then we come into all this chop here. So first count we want to look at is a bearish count, which is slightly different, which still assumes the free is up here, but we had a very short 4 and a very short 5 completing the top of the market. In other words, saying that the Russell 2000 has topped. Now, I don't like the look of this. There's absolutely no relationship between the 5 and the 1, or the 1 and the 3. Projected from the 4 to find the 5 is just a very sudden and short 5, so I'm not particularly keen on it. And the count since then, if we just come into how we would interpret this as a bearish top, let's just get our magnifying glass and zoom in. So really we've only got the option of an impulse wave down, which I have to admit this thing's a bugger. Whether you're trying to count it as 5 or whether you're trying to count it as an ABC, this gap here and the lack of subdivision inside of a clear free is very, very tricky. I don't think you can count this as anything other than either a three-way swing here or a 1-2. And then the subdivision becomes a problem. But either way, it's a problem both ways. You'll see when we come to look at it from the bullish perspective, where we're trying to interpret this correctively rather than impulsively. It's equally tricky. So we top out in a 5. We then put in a wave 1. We've gone A, B, C here into an A, B, C here into a B, and we've done 1, 2, 3, 4, 5 just below the previous high at 2, 3, 4 spot 70. This has to be the 2 if this count is correct, and therefore we must immediately turn down and crash from here violently into a start of a wave 3. If we take out this high, which I think we probably will, then this bearish interpretation is incorrect. So that's the only way I can look at this as being the top of the market at the moment for the Russell. So let's come over and have a look at a couple of alternatives. Now, we'll start with the one that I posted on Tom's charts on my Discord for my patrons, which will be getting updated soon because yesterday this count got invalidated. Now this one calls for the free at the peak here that we were calling the top of the market. In the bearish count, we're calling this the top of the primary free. Okay, we do have an alternate which we'll look at as well, but it's very similar. And you can see here once again we get that I think I've got both pitchforks on here. I can't remember if I have or if I've got the longer term one. I've got that internal one here for the wave 3, which I like a lot. I think I've got an older one that I put up a long time ago. Yeah, now here we get once again the 1, the 2, the primary free comes all the way up to the top of the pitchfork. Now if we shift this into log, we get a touch on the median line here with the intermediate 3, and this is why I've ended up with the primary 3 on the other count you'll see later, just because that's a very likely place for a 3 to finish. But I'm also happy with this because we get a throw over in the 3 of the 3, so we get the greatest peak outside of the pitchfork is in the 3 of the 3, so I quite like that. Because that's where we expect to see, if we get an extension of the 3, we tend to get this very aggressive 3, and then the actual primary 3 is peaked somewhere near the top of the pitchfork. So let's come in and see how we've interpreted excuse me, see how we've interpreted the top here. So as you can see, I was looking for a triangle, pretty simple, where we came down, and now, like I said, this is a free wave. I'm having to interpret this as a free wave swing now, and you can't get 1, 2, 3, 4, 5 A, B, C here and get a 5 clear wave. So the subdivision's really tricky. We either get a really short C with 5 waves down, but then I think we have issues with the 3 here and getting a subdivision into the rest, into the 5th wave, or we can say A, B here, and then we can see 1, 2, 3, 4, 5 clear waves in the C. So this could be one A, B, C into a flat A, B. I mean, then it gets tricky. So I'm not happy with this. Doesn't matter how I try to count it, I don't like this move. I prefer this move up as an impulsive move to finish the 5 of the 3. But even that, the subdivision's a bit dodgy. We then get a nice clean 3-wave swing here, 3-wave swing here, and then we could either count this as a 1, 2, 3, 4, 5 in a C, or another 3-wave swing into a Y. I think I prefer a 3-wave swing ABC here, and this gives us our B. So A down, B up, beyond where we inside of where we started. Correct again inside of where the A completed. Correct again. D here we can see came up to the top of trend line, correct inside of where the B finished, but since then have come down and broken higher above the B, therefore invalidating this count of the triangle. So there's really only 2 other ways to look at this now. Either we did get the D here, but then we got a teeny tiny E, 3-wave move here. I mean, if we come down to the 1 hour, so the relationship here is very off to get this teeny tiny E that we've gone 3-wave here, and then A, B, C, 3-wave here. I mean, you can see there is a 3-wave swing, 1, 2, 3 into the D, and then 1, 2, 3 into the E. So if that's the case, the triangle is completed in a excuse me, in a pretty peculiar manner with a very short E, and now we are going, and it's not impossible. Otherwise I wouldn't be considering 1, 2, 3, 4, 5, and now we're working our way up in a series of impulse waves which will take us significantly higher. So that's one way of looking at it. The other way of looking at it is that we had the D here and the E here, so we get a bad relationship. We get a 3-wave swing here potentially into the D. There's a huge gap here in the E, so we can't really count 3 waves here. Either way, we get a pretty dodgy relationship between the C, D and E. If we look at what we retraced from the B to the C, however, we do get a golden ratio here for the D. Now I can live with that because we've got at least a 61.8% relationship from the length of the C to the D here, right? With the E completing down here and then moving up in 5 waves. So we can either move our 4 to here for that rather peculiar E, or we can move our 4 to here and say that we've had this rather stifled D, E, and then we've moved up in an impulse wave. So from here you can start to count this bullishly. So you can say 1, 2, this is an expanding flat, and then we come to a 3, 4, which looks a bit like a zigzag, and then 1, 2, 3, 4. So coming up into a 5th wave here possibly. And now the peculiar thing is this the 5th wave done into 5 waves? Because we've got that diagonal pattern, right? We're counting this as a diagonal in the SPY or the NDX. So this could be a wave 1 with a 2 to come, 3, 4, 5, taking the market much higher. Okay, and we could have the same kind of leading diag situation in the SPY or the NDX where we get a 1 rather than a 5 in an ending diagonal. So 1, 2, 3, 4, 5. Or this could be the last 5 waves up to a new high and we get a very short primary wave 5. So I'm not really happy either way at the moment. So we'll just keep an eye on the all-time high and assume that we're going to break through it, invalidating the bullish count, which we can then delete and get rid of the bearish count, sorry, which we can then delete the chart, get rid of it when we come back to review it next week. If we do get a completion up here and we have got a 5-wave structure in here, then we can go D, E, 1, 2, 3, 4, 5, 1, then see what kind of retracement we get this coming week. But not particularly clear at the moment. Since this is the way we want to interpret this count and keep our triangle, we will just say that we're expecting some kind of completion here, so we'll keep minute waves for the moment. No, I'll tell you what actually we'll do. We'll split the difference and say that this is minor waves, and we'll give the benefit of a doubt and say that we're going into a 1, 2, 3, 4, 5. On intermediate degree, which would complete our primary degree higher up, somewhere up here, for our 5th primary, for our 5th cycle. And this does push the top of the Russell out into midsummer. And I keep leaning towards that, and have been for months now with all the markets, that we will push higher into the summer before we complete. How we do it, I have to hold my hands up and say the counts at the moment across all the indices are just tricky to interpret. In all the years I've been trading, I've been finding the recent price action more difficult to interpret than I have at most other points on the way up. So excuse me, these are just the options, and we need to see some kind of clear move before we continue. So we'll save that chart like that for the moment and say row A, B, C, D, E, every correction finishes inside of the previous correction. It's just a pretty peculiar D, E. If you'd prefer to count it as D coming back to the upward trend line and a very small E, be my guest, in which case you can start counting your impulse from higher up. Alright, let's come over and have a look at the final interpretation here. So we know that we get a beautiful 3rd wave here inside of the pitchfork. We know that the 1-2 swing here fits the median line pitchfork idea. If I just, no, that's not the one, it must be this one. Yeah, so like I said, switching to log, and then all of a sudden this 3rd wave on the primary degree comes pretty much to the median line. So in this case we've moved our wave 3 across to the left slightly, changing the extension slightly inside of the primary wave 3. So if we come up here to the top again, this now becomes our alternate 3, which we've got in this count, the 3 here. In this count, however, I'm saying that the primary 3 is stopped earlier, and we've got a very complicated sideways choppy correction going on. Now this is an idea that I've been fiddling around with since one of our new members to our Discord, I'm sorry, your name escapes me for the moment, just recently joined, proposed to me an alternative to counting my triangle that I'd put on the Discord for my patrons, and now that that triangle has been invalidated, this has now become an alternate count. So the idea is that the primary 3 topped here in February, and then we've had a 3-way swing here into a running flat. A B goes beyond where the A began. Corrective move, we'd have to count this as the 1-2-3 swing instead, into the C, which completes before the A to put in an intermediate A. And this would be a 3-way swing running flat, and the first 5-wave move down in the minor A. If I just show you, so to this into the minute A, sorry, this is a diagonal 1, 2, 3, 4, 5 into the A. 3-wave swing into the B, 5 waves down into the A. So this is actually a zigzag, even though it resembles a flat, because there's very little downward move overall. It's more of a sideways swing, but this is 5-3-5, so this would have to be a zigzag with a diagonal in the minute A. We then come up into the minor B here. This is dodgy as a B wave. Like I said, I prefer it as an impulse, which gives us our alternate 3 as the potential top here, because this counts better as a 1, 2, 3, 4 with a little ending diag in the 5th at the top here for the, and this would be 1, 2, 3, 4, 5 into our alternate 3. But you might be able to count this as a zigzag. Now it's not pretty. 1, 2, 3, 4, 5 A, B triangle, and then 5 waves here into the C of the B. Haven't labelled it. Like I said, I'm not particularly happy with it. I'm not particularly happy with this as a 3-wave swing either. The whole thing's just a bit choppy. I think I need some more time to really sit down and dig into the chart since I've only recently reintroduced it. But for the meantime, this then calls for intermediate A, WXY swing into a minor A, 3-wave swing here, zigzag into a B, and then 5 waves, 1, 2, 3, 4, 5th yet to come in, bringing us to a new high for our B wave. So our A got an expansion, our B will expand beyond where the A began on the intermediate time frame, and then we would expect to see 5 waves down into a 4th, and this could be a running flat overall, so A, expanded B, short C completing before the A, or it could be an expanding flat bringing the C below the A into a much longer primary wave 4 correction. Either way, it's choppy, it's ugly, and I think I still prefer triangular interpretation, but with a peculiar DE depending on the placement, either on the upper trend line with a small E, or with a truncated, well not truncated, a shorter than expected D and D pressing into a new impulse wave. And that's the way I see the Elliott wave counts at the moment. Like I said, this one's likely to get this one's likely to get invalidated very soon. Pre-market, as I speak to you, is trading at 232.98, which is slightly below the invalidation point. So this is still a bearish count. If we literally turn around and just vomit out of here, like projectile kind of style, all the way just flying down here immediately, we get a violent sell-off, then maybe this is just an insanely deep 2 and this bearish count is correct, but I don't like it, to be honest. My favourite of the 3 is still the triangle. We've just had to reinterpret how we're counting it, and this is maybe something which will become clearer over time. If we see a pivot above where the so we come down into the intermediate A, if we see a B wave pivot above where the A began, and then we start to see a thrust down, we can maybe consider this whole thing a big expanding flat, just with very complex form. You know, where we've got diagonal in the minute here, we've got an expansive B inside of the intermediate A, we've got this WXY A, B. So it could just be a big expanding flat, but too early to tell really at the moment. So we'll leave the Elliott wave counts there, and we'll come do some basic technical analysis to wrap up the video. So which chart have we got in the largest time frame? I think we're all on the hourly here. Let's use the triangular chart. Okay, we'll come out to the weekly time frame. I'm sorry, I just realised I never took you through the longer term count. It's really not important. If you're familiar with, apart from the fact that TradingView keeps moving my cyclical numbers all over the sodding place, excuse me, I don't know why it's not saving properly. I've had this on several charts lately. Anyway, let's come out to the weekly. Here we are. We're going to bring up our exponential moving averages. We have a 10 in yellow, which is coming sometime soon. 20 is blue, 60 in orange, and 250 in green. Let's bring up our indicators. We have an RSI set to a 10 close with a green 30 level representing oversold and a red 70 level representing overbought. We have a MACD here with a 10 for the short-term moving average in blue and a 20 for the long-term moving average in orange. Right then, so what can we see here in the weekly time frame? Let's get rid of our count. So a very bullish move so far this week. Okay, we've been moving sideways, chopping through the 10, down to the 20, chopping through the 20 in a couple of places with the wicks. No bodies settling below the 20 though. And now we've had what looks like a pretty strong thrust to the upside. So very close to the all-time high, very close to pushing through. If we do, we should be observing that impulsive move where we get the DE finish wherever it is, whether it's here or whether it's here. We want to see a clean impulse coming out, and then some kind of pullback. Above the 6250 miles and miles away, in fact the 250 is now looking extreme because of how this extension in the 3, which you can see here, which we know fits that pitchfork beautifully and subdivides beautifully. We can see that's resulted in the price getting 48% ahead of where the 250 exponential moving average is at the moment, which is extreme. It's just extreme. The RSI is, well, we've got this overbought back into under overbought. We didn't come back. We came down into the neutral zone only just. Does look like a bloody triangle when you look at it. It really does. 3, 4, 5, A, B, C, D, E, off. Does look like it. No support on the weekly time frame for that idea in the RSI though. We don't see a swing down and a swing up and a swing down and a swing up. MACD short-term moving average is cooling off. Bearish bars here on the histogram are lightening. The shorter-term average is starting to turn up towards the longer-term average, looking for a bullish cross. A push back into overbought territory on the RSI could develop a bearish divergence for a fifth and final wave. It could push up quite some way and still not clear the previous high on the RSI at 82. I make it roundabout. So we'll have to keep our eyes on this as this price develops. Likely to get another bullish crossover, but also likely to end up short of the previous high on the MACD if we are coming up into a fifth wave. And the assumption is that we are coming up into a fifth wave because we're assuming a triangle. And if we're assuming a triangle, that is either going to appear in a B wave, an X wave, or in the penultimate fourth wave of a motive wave, which we're assuming we're in. Okay, so that's the day time frame. Let's come down to the... sorry, that was the weekly time frame. Let's come down to the daily. Charts are really laggy today. Don't know why that is. Internet connection's fine. So above the 10, 20 and 60, we've coiled around with the short-term moving averages. The 60s come up to meet us here. We looked really bearish a week or so ago, but we weren't able to drag the 10 and the 20 through the 60 with price below it. We bounced strongly into what either is a 1, 2, 3, 4, 5, or was the D and the E, and then impulsing out of a triangle. So that's looking bullish. Obviously the volume, it doesn't matter where we look, on this small time frame the visible range of the volume is always going to be through the middle of this. We tend to see what we're assuming is a triangle pattern get split right through the middle when we're looking at the volume, because, you know, we get rejected, we catch a bid, we get rejected, we catch a bid, we get rejected, we catch a bid, and then we finally break and we don't get rejected. Or the opposite if we're in a bearish case. RSI heading back towards overbought. Conditions not there yet. I would expect to see us push up into there though. I mean, we might get a temporary retracement, but if we're coming up into a fifth, we have gone from overbought to oversold, so I'd expect to see oversold to overbought again to finish off a fifth. And then the MACD starting to get some brighter green bars in the histogram. Short-term moving average starting to accelerate away from the long-term moving average. Everything here looking like a bit of a bullish springboard after this consolidation, ready to race higher. So for the meantime, things are looking bullish. It looks like a completed wave 4 correction. It could be the longer, more long-winded correction with an expanding pattern inside of it. Not my favourite interpretation at the moment. So for me, as I often like to give a preference, I think we've completed some kind of 3-4 into a bit of a peculiar triangle ending here with an impulse coming out. So we're likely to come up to a new high, then we're likely to pull back for a 2 and then press on to higher highs is what would be my preference. But we'll wait and see what the price action tells us over the coming week. Alright then guys, thank you for joining me on this technical analysis of the IWM ETF. If you're new to the channel and you've liked what you've seen, please like, subscribe, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. And as always, thank you to all my patrons. Your support is greatly appreciated. If you're interested in becoming a patron, now's a good time to do it. Head over to the link in the description below, read the tiers, see if you're interested. And also, if you're not following me on Twitter yet, there's a link to my Twitter feed in the description box below as well. Alright guys, take care and I'll be back with you soon. All the best. Bye bye.